Massive growth for these stocks. Hi, guys. Welcome back to Stacking Stocks, and many thanks for joining us today. As usual, we're bringing you exciting and informational content. You're not ready for today's session. That should get you pondering and speculating on today's headlines. Can you guess what we have for you today? Well, we'll definitely be talking about stocks. But what kind of stocks are we discussing today? We'll give you an extensive list of stocks with massive growth in 2021. Before we delve into today's topic, let's recap what we discussed in our previous session. In our last session, we analyzed how big whales dominate the Bitcoin market. Furthermore, we listed some of Bitcoin's big whales and the amount of Bitcoin that they hold. If you missed our last session, you can still catch up. The video's up on our channel. You ought to find out more about Bitcoin's big whales. Anyway, let's now get into today's headlines. We'll look at some of the top growth stocks to buy in 2021. Some of the biggest stars last year have gotten off to a difficult start this year. Here's a list of some of the best growth stocks this year. Let's start with Square. Square, a payments and point-of-sale solutions company, has been a growth stock for many years. How do you think this company's been able to maintain such a feat? Over the last 5 years, the company's revenue has grown at a compound annual rate of 49.6%. Can you imagine that? It's an amazing feat. Let's have a look at what a report released by Square states. 44% year-over-year net revenue growth, showing size hasn't slowed its prodigious growth much. A big chunk of Square's current growth comes from Cash App, its Venmo-like peer-to-peer mobile payments app. In the first quarter, Cash App's gross profits jumped 171% year-over-year, accounting for $495 million, or 51.3% of Square's total $964 million of gross profit. Just a year earlier, Cash App's gross profits of $183 million accounted for just 34% of total gross profit. Square is now worth more than $95 billion, and analysts expect earnings per share, or EPS, to grow by more than 55% annually over the next 5 years. Can you see the attractive figures posted by this company? You should probably consider adding it to your watch list. Next on the list, we have Amazon.com, or AMZN on the ticker. Now, who doesn't know about this giant corporation? Amazon is one of the biggest companies in the world. Amazon should have been on your radar long ago if you're an active and serious stock investor. Despite its size, Amazon has proven that it can post outstanding growth rates, thus making it a natural member of the best growth stocks to buy in 2021. Are you wondering how that's possible? Let's find out why. Unlike many big corporations, Amazon has for many years chosen to expand its market share through razor-thin margins while plowing every dollar back into long-term investments, thus denying itself profitability. But we can see that Amazon's sacrifice is beginning to pay off in the long run. Here's what a report indicates on Amazon's market expansion. In 2021, Amazon remains a glorious tale of margin expansion combined with rapid top-line growth. Its international business just turned profitable in 2020, and for a company with $419 billion in trailing sales, Amazon's 44% growth rate last quarter is simply stunning. Amazon is still looking to disrupt other parts of the economy, reportedly planning its own primary healthcare services business that it'll offer to large employers. With healthcare spending accounting for more than 17% of the U.S. economy, Amazon has its eyes on the prize. We can see how Amazon's desire to expand its market is helping it dominate the stock market. As you can see, the company's posted a stunning 44% growth rate in the last quarter. Wow, doesn't that motivate you as a stock market investor? If it doesn't, I don't know what will. Can you guess what we have next on our list of the top growth stocks? It's not a quickly expanding company like Amazon and Square, but it has a strong record of growth. Next on our list is NetEase, NTES on the ticker. What do we know about NetEase? Are you an investor who finds online gaming fascinating? NetEase is a Chinese online gaming company whose pipeline and valuation make it an attractive growth stock you can invest in this year. Here's an insight into its sales report. Sales growth over the last 5 years has clocked in at more than 27% annually and remains impressive with a 25.6% year-over-year growth rate just last quarter. In development are games based on already popular franchises such as Harry Potter, The Lord of the Rings, and Pokemon. If online gaming fascinates you, this is your go-to stock investment company. And that's not the only reason why you should consider buying NetEase stock. Do you want to know more reasons why it should already be on your radar? Whereas gaming is its primary source of revenues, e-commerce, music, and the online education businesses managed to grow in 2020. The company's growth is tipped to go even higher. Next, we have Nautilus, or NLS, on the ticker. Nautilus might not be a high-end home exercise bike company like Peloton, but it should be your choice for stock investment. What does this company really do? What's the differential that makes it a better company to invest in? Well, Nautilus makes its namesake workout equipment and also owns both Bowflex and Schwinn. Moreover, the company is also getting into the subscription-based connected fitness business. Wow, it seems like Nautilus is going all the way to maximize its revenue. Speaking of revenue, let's have a look at what a report by analysts indicates. Shares have been on a roller coaster in the early part of 2021, but if recent numbers are any indication, then Nautilus should be in for a rebound. Analysts were expecting revenue of $159.2 million on earnings per share of 52 cents, but instead were treated to $206.1 million in revenue. That's up 119.9% year over year, and the earnings per share of 93 cents, driven by its connected fitness bikes and treadmills. Nautilus was also named one of U.S. News & World Report's 10 best stocks to buy for 2021 overall. And with rival Peloton now embroiled in scandal after a treadmill recall, Nautilus still looks poised for outperformance. What can you get from this report by analysts? We can see that the stock did better than what was expected by the analysts. It also hit the headlines of a major news station when it made it to the top 10 best stocks to buy in 2021. Well, what can we say? If you haven't considered adding this stock to your watch list yet, you probably should. Let's move on to the next stock in our growing list. Next, we've got Fiverr International, or FVRR, on the ticker. Are you familiar with this popular freelancing company? If you're an investor majoring in freelancing, then you might have heard of this e-commerce marketplace behemoth. Fiverr matches buyers and sellers in this fast-growing gig economy. Ask any freelancer around you if they know about Fiverr. Most of them, if not all, are quite familiar with this company. Freelancers get to seamlessly connect with individuals and entities looking to hire someone for a vast range of services. The services include animation, data entry, design, marketing, programming, translation, website creation, and many, many more. Imagine being able to hire people with such ease. What do you think is the differential behind Fiverr's success story? Here's what a report indicates. As more buyers use Fiverr to find freelance talent, growing demand attracts more sellers to the platform, bringing deeper talent and a wider range of services, in turn attracting more buyers. Fiverr broke into the black last year, and analysts don't expect the company to look back. And top-line growth is bonkers, with revenue jumping 99.7% year over year last quarter. Expect Fiverr to be volatile. Shares have more than tripled over the last year, and at 30 times sales, the stock isn't cheap. But with exploding profitability, Fiverr is a risky growth stock worth the stretch for more aggressive investors. What do we get from this report? From high revenue figures to shares tripling to a potential increase in growth rates. It's amazing. Have you considered this stock as part of your investments? Maybe you probably should if you haven't done so. That was the last stock in our list of best growth stocks for 2021. We've come to the end of our session today, and once again, we want to thank you so much for tuning into Stacking Stocks today. Remember to like, share, and subscribe.